Inflation report shows some positives, some negatives as well. The July Consumer Price Index, also known as CPI, showed an annual increase of 2.7%, which was in line with June's reading and below the expectation of 2.8%. The headline number was helped by energy, which showed an annual decline of 1.6%, largely thanks to a decline of 9.5% for gasoline. Energy services, on the other hand, were not as favorable, considering an increase of 5.5% for electricity and 13.8% for utility piped gas service. I do wonder if the power demand for these large data centers is starting to put a strain on the grid, and I worry this could become even more problematic for those energy prices. As for core CPI, which excludes food and energy, it was up 3.1% from a year ago and was slightly above the forecast of 3%. This was a slight increase from the 2.9% level in June and the highest annual increase since February. Surprisingly though, shelter continues to be a large reason for the elevated inflation rate, as it was still up 3.7% compared to last year. In terms of tariffs showing up in the report, it still appeared to be subdued. Furniture was one that was up 7.6% compared to last year, but other areas that I would anticipate seeing pressure, like apparel and new vehicles, saw little change. New vehicle prices were up just 0.4% compared to last year, and apparel prices were actually lower by 0.2%. I did see an economist point out the fact that core goods inflation on an annual basis registered the largest growth in over 2 years, but at 1.2%, I wouldn't say that is putting strain on the economy. These tariffs will likely put continued pressure on inflation, but if other areas like shelter continue to see less inflation, that could counteract that pressure and keep overall inflation in a manageable situation. Based on the slower labor market and these manageable levels of inflation, I do believe the Fed should cut in September. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.